If you're a swing trader, why not scalp or intraday trade all at the same time so you can maximize your profits? And it's so simple that it's ridiculous. You don't have to think at all. And I'll make sure of that. I'm going to show you 5 easy steps to follow so that you can be profitable. Whether if you struggle with consistent profits or don't have a reliable trading strategy, this will be good for you. I'm Brian Horton with BK Forex Academy, where we teach new and struggling traders learn how to trade the right way with personal guidance so that they can have a breakthrough and trade with confidence. Do me a favor, hit the like and notification bell, subscribe, and we'll get right to the video. All right, guys, so this is an awesome strategy. Remember, we want to swing trade, we want to scalp and intraday trade all at the same time within one pair. This strategy is for someone who doesn't have a strategy at all, or someone who have consistent losses or having trouble profiting. And so all you have to do is do each step. Go ahead and adopt this if you like. So what we're going to do first is start on the daily, because we want to first identify what trend we're in. Determining the trend is step number 1, okay? We don't quite know if it's an uptrend or a downtrend yet, and that's why we like to zoom out. So you can start on the weekly or the daily, right? Depending on how far you want to trade and what's going on. I'm going to zoom in a bit to the daily, and we're going to see what's going on, okay? Let's go ahead and hit play and see what is happening when we're going to make our next move for step number 2. So we see price consolidating is not really doing much. It looks like it's starting to reach higher highs. And I am going to stop it right here, okay? So we see that it's starting to make higher highs. So what I'm going to do is first draw a trend line here, because it looks like it's starting to rise, okay? What I like to do next is drill down to the 4-hour. It gives me a little bit more in depth of what's going on. So I'm going to fix my chart a bit, okay? Let's stretch it out. And it looks more like an uptrend on the 4-hour. But let's dissect it a bit, okay? So for those who are new, this is how we identify an uptrend, okay? We have a low, because this is as low as it's been here. We have a low. Then we have a higher high, a higher low, a higher high, higher low, higher high, higher low. You get the picture. Higher high, and so on and so forth. So we have a series of higher highs and higher lows. That's how you identify an uptrend. All right. Step number 2, we want to identify when price pushes beyond the previous zone. So you have to understand how to find the previous zone. Very, very simple strategy here. So here is our previous zone here. And all it does is look like a straight line where price had retest that area multiple times and then it reversed. So we can see multiple candles hitting this area right here, push up to the upside. Let's go ahead and zoom in just a bit. So we have price touching this area, came down, touched this area multiple times, came down, touched this area, came down, so on and so forth. So this tells me that this price is really significant to sellers, right? Because every time buyers pushes up, sellers tend to come and dominate. Buyers pushes it up, sellers dominate. Buyers push it up, sellers dominate, okay? And it touched it multiple times. So this price is very, very important to the bankers and to the hedge funds who control the market. So let's keep that in mind. Now we're going to today. We see higher highs and higher lows. We can stretch this all the way to where price is now, right? So that leads me to step number 2. Like I mentioned, we want to identify when price pushes beyond previous zone. So here's price here. And guess what? It pushes beyond. So buyers dominate at this point. Finally, after months and months of trying, they finally come to dominate and push beyond. Okay, so that's step number 2. We still haven't entered the trade yet. We're just identifying what's important to the market makers. That leads me to step number 3. Wait for the pullback to retest the zone. Okay, price push beyond this resistance area. And then guess what? Here is our pullback to retest. So remember, it doesn't matter if price is coming from above this area or from below this area. We know that this area is important to market makers because it retested multiple times in the past. So we always look in the past to determine the future. So this is part of price action trading here. So once it retests, let's bring our resistance area here. Now this resistance area is support, because now price is being supported by that area. And once we see that pullback, that leads me to step number 4. We want to enter our swing trade strategy. and we're going for a buy. Now, why a buy? Because our bias is an uptrend. We're trend trading, okay? And swing trading is when you're in a trade for a day or two or more, like a couple of weeks. So we plan on entering this price and then forgetting about it. We can check it every few hours, every day, depending on what you feel comfortable with. But we're trend trading. And so we're entering this market and we're not really caring what's going on here and there. All right. So when you're swing trading, if you lose 40, 50, 60, 70 pips, that's fine because you're in for the long haul. You're in to get this here, all the way up here. Okay. We know price may come down a bit, come up, come down a bit, but it's going to respect this area. And we're looking for this here. We're looking for the major moves to collect. Okay. So that's our goal. So like I said, step 4, we want to enter your swing trade for a few days to a few weeks. Step number 5, we want to drill down to a lower time frame. Now, when we drill down to a lower time frame, now we're looking into intraday trading and scalping. Okay. So we put in our swing trading. We're going to leave it. We're going to forget it and make our money. Now we're going to scalp, which means you're in a trade for 30 minutes to a couple of hours, and then even intraday trade, which you're in for a couple of hours up to 24 hours. So now let's drill down. We're in the 4 hour currently, and this is the magic hour. This is the magic chart that we look at for intraday trade. We can use the 4 hour, and then we can also share it with the 1 hour. So let's go ahead and look at that. All right. So now, like I mentioned, we're going to drill down to a lower time frame. You can start with the 4 hour for intraday trading. We see price is here. Now, we always teach that wicks tell us a story. The longer the wick, the more of a probability that price is going to go the opposite direction of the wick. Okay. So we can see this wick here is pretty long. We know we're in an uptrend, so our bias is always up. But what I like to do is use the Bollinger Bands to help me determine that buy. So we only plan on being in a trade for up to a day when we're doing intraday trading. So I'm going to throw in my Bollinger Band. And ideally, when you are trading, we want to see price respect our Bollinger Band, okay? So the bottom of the band acts as our support. The top acts as our resistance. When price hits the Bollinger Band or even pierce through it, we're expecting for price to reverse and go the opposite way, okay? So let me go ahead and hit play and let's see how it plays out. Okay, so right here, remember each candle represents 4 hours, okay? And we see price hit the bottom of the band, it respects it, and then it begins to shoot up. So that tells us that sellers are losing steam, buyers have picked up the pace, and it's shot to the upside, okay? So you could enter in literally on any of these pips here because it's touching the band, specifically this white band here. Let's go ahead and zoom in. And then price begins to shoot up. So each candle represents 4 hours. I'm going to get my measuring tool from here to here. And let's say that's about 40 pips in 4 hours. If you want it to stay longer for 12 hours, that's about 50 pips. And 16 hours, about 53 pips, okay? And intraday trading takes a while, just like swing trading, just not as long, but it's a lot longer than scalping. So you're in it for a few hours to 24 hours, like I mentioned. So you don't really have to watch it like a hawk every moment like you do scalping. So you can leave it, forget it, maybe check it every half hour or so, maybe every hour. And so while I'm in the swing trade, waiting for price to reach all the way up here, I'm leaving it for a few weeks. I'm also intraday trading in the trade for 4 hours to maybe 18 hours or so, right? Getting pips that way as well. So that's how you do it. I can drill into the 1 hour and I can see it in a microscopic level. I can see the same circle that I initially drew, which is my high or low. Price has respected the Bollinger Band. It touched it a bit. If it can pierce through it or touch it, but I ask you to practice patience because we want to make sure that we see a closing candle above when price hits the bottom of the Bollinger Band. And we can see price pushed up each hour, right? So that's how you intraday. Now, if you want to scalp, you want to drill down to the lower time frames. You can start from the hour and anything below. Right. So the idea of going down to a lower time frame is that the lower the time frame, the lesser amount of pips you plan on getting and the shorter amount of time you plan on being in that trade if you're trading the right way. OK, so let's go ahead to the 1 hour and we're going to apply the same thing, the Bollinger Bands. Right. We want to sell when price pierces through the bands and we want to buy when it pierces below the bands. So here you can counter trend trade because we're only scalping for a few minutes to maybe an hour or two. So as price ultimately is going in an uptrend for my swing trade, and then even for my intraday, I can scalp this all day long. Let's go ahead and hit play and see what happens. So we see price bust through this upper band, and then it drops, right? So each candle represents 1 hour, about 33 pips or so, right? So this one was a little longer than we anticipated because some pairs are more volatile than others. But the idea is when price hits the resistance part of the band, you can expect price to come down. All right, guys, so that's the ideal. You can hit the 30-minute chart and look at it at a microscopic level. We see that price is approaching the band. Now, one thing that I want to express to you is that you don't want to sell just because it's hitting the band. I like to see some separation. So what I mean by separation is that price is riding on the band. You don't want to sell when it's riding because it's showing some strong momentum to the upside. You want to get in when there's separation. Here's our separating point right here. Here's our separating point here. It's not touching the band, so it looks like it's losing strength. And then we can see that push here to the downside. Okay. You can exit whenever you want and you can ride that strategy as long as you want. But you guys keep these steps in mind. Highly, highly important. This is how you can have multiple trading styles all wrapped into one pair. Easy strategy, guys. I want you guys to try this. Let me know in the comments if you've tried this strategy before. If you have a different strategy, but similar, where you can have different trading styles all in one pair. And those who haven't tried it, please try this and then drop in the comments when you try it and let me know what happened and what you think about it. In the meantime, those who are struggling in trading or those who need their handheld or absolutely brand new traders, I encourage you guys to check out our Forex Academy, which is in the description, where we teach new and struggling traders how to trade with confidence, and we hold your hands every step of the way. And then also I encourage you guys to join our Telegram, where we drop free trade ideas, link in the description as well. We'll see you in the next video, and you have a blessed day, guys. Take care.